Welcome to the Building One Story at a Time podcast. I'm Stephanie LaChance. Today, we are doing Market Reflections with Bill, and I am joined by Bill Patrick, Director of EGStoltzfus Sales and Marketing. Welcome, Bill.
Thank you, Stephanie. It's really wonderful to be here. So exciting to have launched a podcast, and I thank you for inviting me.
So on this kind of little segment we are planning to do occasionally, our hope is to bring you guys some information on kind of the market status, what's going on in the real estate market, what updates do we have to provide, what are we noticing, whether it's specific to new construction or whether it's a little bit more broad and general to just the counties and like kind of our area that we build in here in South Central Pennsylvania.
Yeah, it's always characterized by the segments of the market, meaning the type of homes that people are purchasing, but also the micromarkets themselves. And we work in, what are we at now, Stephanie? How many neighborhoods?
10? Is it 10?
Yeah, 10. If you throw in our custom neighborhoods, I think we're at 12. But each little area, mostly determined by their school district, represents a market that's unique to itself.
Absolutely. And some very interesting ways that all those little factors play in, a little bit of freakonomics, maybe, so to say.
Yeah, there's always a tipping point, another good one to consider when thinking of some of those big books where we're trying to understand how things are the way they are.
Well, Bill, let's start out today by you giving just kind of like a little update on the current status of the market, what we're seeing in South Central PA. So what do you got for us?
Well, if we start with the overall real estate market, which the most homes or most homes that are sold in are resales. And we continue to struggle at about a third. And I'm going to speak mostly about Lancaster County since that's who we follow most. But I know it to be true in Cumberland and York County, where we're also selling. Resale inventory is about a third of what would make for a balanced market in typical. So Lancaster County, we keep bouncing around about 500 resale units. And we're told that somewhere between 1,000 and 1,500 would give us something balanced. So,
and when you say balanced, you mean neither a seller or a buyer's market?
Correct. So that most homes would sell very close to the price they're offered at. Still not the case for homes, especially under about $750,000. They are coming on the market. Anything under $500,000 is just hit with multiple offers and are selling for tens of thousands of dollars more than what they entered the market priced at. Balanced would be, again, yes, selling somewhere close to what, or maybe even a little bit below they were priced at based on competitive market analysis.
What would you say is the market history, specifically like in Lancaster County? Do we typically have a little bit more of a balanced market?
Well, there's no doubt we're now 4 years, just a little bit over 4 years past the great shutdown of March 2020, and the market in 2019, we're still looking to return to where that was still light on inventory, still fewer people entering the market to sell and in the market to buy. But currently, we're not even close to that.
Wow, very interesting. Do you think that it's because there's more people who are looking to move to Lancaster County? Is that part of why maybe supply or demand is so high too?
The factors are just weird. We do have people coming in and putting pressure on our marketplace, oftentimes from the New York, Philadelphia corridor, New Jersey, where they're selling their homes for more and showing up with a perception of value that's higher than what those of us that live in Central PA are used to, and they're able to bid up homes. I don't know with any data what that number is. When we look at our sales in EGStoltzfus, it feels like that's more than what we would have experienced in 2019 and earlier, the prior 5 years, which were relatively balanced in the marketplace.
We keep hearing about these great exodus from, these major cities post-COVID, people wanting to leave these highly populated areas, move out to more rural areas. And when I think about those rural areas, I mean, Lancaster County certainly fits the bill. We have, beautiful sprawling farmland here. We are a great tourist destination. Lidditz, which we build in at Warwick Crossing and Lidditz Reserve, was voted, one of the coolest small towns in America previously. So there's a lot going on here. I could see reasons why people are drawn to this area.
Yeah, you would talk to anybody that grew up here and think that we're not rural, but compared to living at a exit on the Garden State or New Jersey Turnpike, we're quite a slower pace. So there is no doubt attraction here. One of the other factors in play, though, seems to be people really in love with the mortgage rate that they had before interest rates were raised to counter inflation, which is a whole other subject. I'm not so sure we want to dig deep into analyzing macroeconomics. We're down here on the micro level, just trying to get people into their next great home, hopefully with EGStoltzfus. But at play are some forces that didn't exist prior to COVID. We're hoping that what the Fed has said and the indications are there'll be some interest rate easing a couple of times maybe before the end of the year, probably before the election, and will help people get used to maybe that monthly payment that we certainly can give them certainty around purchasing a new home for their family or any home that you couldn't necessarily in a resale situation.
Yeah, why don't you tell us a little bit about that value in new construction and maybe how the current market is kind of giving you some of that value already built in because of these market conditions?
Yeah, the one factor, biggest factor for buying new over a used home, right, is that you get a ridge to foundation, roof ridge to the bottom of your foundation footing, 1 year warranty. So that really is just to make adjustments and help you through any issues that might come up in that first year. But practically speaking, very few unforeseen non-discretionary expenses are going to come to a new homeowner in those first 10 years, particularly with EGStoltzfus homes. We know that, and we can confidently say that. So the monthly payment that you do sign up for when you purchase an EGStoltzfus home is the payment, the housing payment that you'll be following through for many years to come. Whereas with a used home, not only are you competing, oftentimes for people that are willing to take on the risk because they might have more resources or more tolerance for the uncertainty, that you could move into a home and be replacing things in a very short period of time, or having to remodel just to make it fit your lifestyle. So huge factor to consider when weighing a used home against a new EGStoltzfus home.
Yeah, another way that we kind of build in value in new construction too, at least while we're still building in the neighborhood, your home will always increase in value, right? Because we, as the builder, we only ever really raise our prices because building and construction costs get more expensive. So if you were to need to resell your home, move out of the area, etc., you would be competing against us, the builder. And since we're raising the prices, then you have that additional value built in for you as well. And when you think about, like, I know there's a lot of people out there that we see maybe at our design studio open houses that come and visit our model homes on the weekend and talk to our sales agents who have so much value in their home. They might have bought it 30 years ago. They paid off their mortgage early, and now they have all this value in their home, and they're kind of sitting on it, and they're wondering, do I stay? Do I remodel? Do I move? And so that's essentially the same type of equity and asset that you're creating for your future when you're purchasing a new construction home.
Yeah, and these particular market conditions, Stephanie, you're right on the spot with the sense that over the last 3 years in particular, people are, if they purchased at that point, and even if they just purchased a few months ago, the shortage of product, whether it's new construction or resale, the overall real estate market is still coming up short with inventory. There are appreciations being realized across all of our neighborhoods, and people have gained equity at an I don't want to say unprecedented, but at a really strong clip that I think would make anybody feel good about making a new construction purchase. And the fundamentals of supply and demand indicate that is going to continue over the next several years. So you've definitely got to live somewhere, and living somewhere with certainty and confidence in even an appreciation for a brand new home over the short term sounds like a great recipe for satisfaction and contentment.
It sure does, yeah. Well, thank you so much for joining us today, Bill. Is there anything you would like to add before we wrap today?
Well, I'm really excited about this podcast venture that you and Katie started, and I know you're representing us with really inspiring thoughts and ideas. And I want to give a shout out to Paul McBride, our marketing specialist, who's
podcast producer.
Yes. Technologist, long list.
He wears many hats. Yes.
He does. And I look forward to checking back, giving some reflections on the market, and maybe we'll dig into some deeper specifics in the coming months. But
wonderful.
Thank you.
Thanks, Bill. All right, we'll talk later.